So if your company decides to change the stock exchange upon which its stock is listed, or its stock is delisted, or the company receives a notice from its stock exchange that it's in non-compliance with the listing standards, you will need to file a Form 8-K with the SEC within 4 business days to tell the market what's happened today on Zippy Point. I'm Brock Romanek, and I'm a big fan of use. So under item 3.01 of Form 8-K, an 8-K is required to be filed if one of 4 things happen in this area. 1, the company receives notice from the stock exchange that it's out of compliance with the listing standard 3.01A. 2, the company rats on itself that it's materially out of compliance. Item 3.01B requires disclosure when a company notifies their exchange that it's aware of any material non-compliance with the rule or standard for continued listing. When it comes to foot faults, minor errors, it might be wise to call the exchange to talk to your specialist to confirm that the non-compliance is indeed not material. 3, the exchange issues a public reprimand letter to the SEC. That's item 3.01C. And 4, the company's board has taken definitive action to change its listing, item 3.01D. And Form 8-K is still required even though there might be an exchange rule. For example, the rules requiring an independent audit committee that provides an automatic cure period. Instruction 2 of item 3.01 of Form 8-K notes that grace periods or extensions do not alleviate the requirement to file an 8-K. It doesn't change the trigger. Trigger dates. The trigger date is the date you receive a non-compliance notice or a public reprimand letter. The ratting on yourself is a little bit more challenging when you know it's material, when the exchange confirms that for you perhaps. And if you read item 3.01D, that provides that disclosure is required if the board takes definitive action to delist a company's securities. That's when the company is ready to transfer its listing to another exchange, or maybe the company is simply going dark and not trading anymore. Maybe there's a merger. The company is being bought. So the trigger here is board approval or authorization to delist or switch exchanges, not the date the company first takes some sort of action. Under this Corp Fin staff interpretation, a Form 8-K is not required if the company transfers from the OTC Bulletin Board to the American Stock Exchange, which is now part of the NYSE, since the OTC Bulletin Board is not a national securities exchange. Let's walk through a couple of examples. This first one here is the company's stock price is below $1 for 30 consecutive trading days. So the company is not meeting the NYSE's minimum average share price rule. That rule and the Nasdaq similar rule is the reason why most of these 8-Ks under item 301 get filed, that the company has gone below $1. So the company got a notice and has 6 months to get in compliance. Now, apparently the NYSE's rules mandate that the company has to issue a press release that it got this type of notice from the NYSE. And so that press release is filed under item 9.01 in Form 8-K as an Exhibit 99. Here's another example. This is a Nasdaq company who received a notice because it hadn't met Nasdaq's minimum average share price. Here you don't see an exhibit filed, so I assume Nasdaq doesn't have the same rule about issuing a press release if they get this kind of notice. Here's another example. This Nasdaq company received a notice of non-compliance because they hadn't had an annual shareholders meeting within 12 months. In this example, a company has a minimum average share price problem, and it discloses that it hopes to get back into compliance, but there's no assurances. So there's not much you can say in the way of remediation disclosure in these circumstances if you're filing an item 301 8-K, because you're probably in dire straits and you don't want to overpromise, because you'll probably, if you overpromise, you're going to underdeliver. Here's a good example. A company is back in compliance after 5 months after it had fallen out of compliance. So notice this is a new 8-K. It's not an amendment to the one that this company filed when it received a notice of non-compliance. This type of 8-K saying you're now in compliance is not required, but obviously companies would voluntarily want to do so because this is good news. This is a good news 301 filing. Notice that instruction 3 to item 301 states that you don't need to file 8-Ks each time the company gets another notice of non-compliance if it's for the same issue that it has. So I've seen examples of companies doing that, though, that they file a new Form 8-K each time they get a notice of continuing non-compliance. They want to keep the market informed. Here's an example of an acquired company that's about to close its deal and no longer trade. And then finally, here's an example of a company moving from one stock exchange listing to another.